Rodrigo Neshembeni. Nice to see you again.
Hi, Mark. Good to see you.
We're waiting for GDP, US GDP figures this afternoon. That's quite an important number that we've been looking to for a few weeks. Is there any tension in the forex markets?
Yes, the market has been, of course, watching it very closely and carefully. There is expected to be some deceleration. The U.S., all of there are several economic projections pointing to a slower and lower GDP growth for the last quarter of last year. However, that's been sort of eclipsed today, particularly by the ECB. There's the ECB meeting today that's taking the forefront of the FX market, as rightly so, as it should. That can be a big deal. It doesn't seem that it will be a big deal because Lagarde will probably dodge questions on the future path and of interest rates, and she will probably say that the mission is not yet accomplished. It's too soon to call it quits. It's too soon to rest. So she will probably have a more hawkish tone, leaning towards dismantling the bets that the ECB would start lowering rates soon, because there was in Davos there were speeches and there was some confusion that came to the fore, and the market started pricing an aggressive rate cut path for the ECB going forward, the same way the market did for the Fed. And so the ECB today will probably be a disappointment for the dovish mindset. Will probably be a more and the simple fact that it will not match the dovish expectation will come to sound hawkish. So we should probably see some euro dollar appreciation, some euro appreciation across the board. Even
Well, say the ECB guidance or the statements they're making are dovish. Oh, sorry, are trying to calm people's expectations down, which they've been doing for the last few months. Couple that with, say, slightly better than expected US GDP, because the US
right.
GDP only expected, say, 2%. What would be the reaction of that to the market, do you think?
That means a very volatile day if that happens. If the US GDP comes a bit stronger than 2%, that of course will bring some dollar strength. And that will probably be fleeting, and that will be a very volatile couple of hours, because 15 minutes after the GDP, US GDP comes out, then we have the ECB press conference, and of course the reaction will be to the press conference, as it has been for some time, not in the decision, because the decision is stand pat and do nothing. They will very, very likely do nothing today, not raise, not cut, nothing. So sure. The reaction is in the speech. So to answer your question, a stronger GDP than is being forecast is dollar strength, pair down. And then the Lagarde comes 15 minutes later to say, no, the market's pricing a too aggressive rate cut. We're not going to match that. That's dollar negative. That's euro upwards. So brace. Traders should brace for a very volatile day. It has been very volatile already this week. Yesterday was peak to trough 100 pips, so in the euro dollar. So today it should be probably even more. It will probably be a whole lot of nothing, because these forces will neutralize each other.
Sure.
If the US GDP is a bit stronger, and then Lagarde is a bit less dovish, neutralizing, but with a lot of volatility. So my advice to people out there would be trade small today. Keep leverage very low, because it will be like one of those mechanical bulls in rodeo parties where it moves very fast and furious without leaving its place.
Okay. All right. What would be your upper and lower limits on euro dollar, for instance, following unexpected announcements today?
For today, if there is a stronger GDP, stronger than 2%, let's say if GDP comes at 3-ish percent for the US at 1:30 London time, then we should probably see the euro down to the pair down, not much because of the ECB, so people would be on the sidelines. So probably down to 108.50, 108.40. And then if Lagarde sounds less dovish than expected, as I think will be the case, we should probably see it up to 109.30, 109.50. So 100 pips peak to trough again. But if she sounds a bit more hawkish or less dovish, as I think will be the case, we might see an unlocking of euro strength further towards 109.50 and possibly even above. Because the dollar has been quite strong in the last few weeks, several weeks since the end of last year. It has weighed the pair down in simply due to the fact that the U.S. interest rate rise has been priced. Has been the rate cut path that was
Yeah.
six cuts for this year has been
Yeah.
undone.
Yeah. Yeah.
So that was the Fat Waller speech in Davos,
Yeah.
and that was the dovish words. The dovish people were disappointed with the Fed, so dollar got much stronger, and now as the rate cuts are priced in for the dollar, they will move faster than the ECB. That's without a doubt. This has always been the case. The
So what?
Fed is
Imagine throughout the year the major central banks act in unison, which usually they don't. But say they act in unison with a little bit of a delay. Everyone will be following the US, I imagine, as usual.
yeah.
Does that mean there's a net zero effect on major currency pairs?
Yes, that is an FX trader's dream because then there's no contrast in monetary policy. Both are moving in tandem.
Hmm.
And then it's a great sideways tunnel throughout the year for swing trading, day trading, scalping, but the longer term moves. So if they do that, if they would move in tandem and in lockstep, that would be a very safe environment to trade and very predictable. But as you rightly pointed, they rarely do, and the Fed usually is traditionally is faster. It's simpler for them to decide, right? The
Hmm.
ECB has 20 countries involved,
Hmm.
and traditionally also slower moving, more patient
Yeah.
culturally. So the Fed will start sooner and will move faster, in faster steps. The
Okay.
ECB will take a bit longer to start. So, which translates into the Fed starting to lower rates June, July,
Yes.
and the ECB probably September. I think it will be that late because there will
Yeah.
be bouts of inflation now.
Yeah.
They would want to lower earlier than that before, sooner in March, for example, but they won't be able to because inflation will still rear its head and show its face in the next few months.
All right. Okay. Let's look at a slightly longer. Let's push our vision out slightly longer to the end of the year. Um, 2024 presidential election year. You've been a trader in forex for 20 years, I think. So you've seen a few of
Right?
these. Is there a pattern
Yeah.
for the dollar in presidential election year?
Yes, usually the dollar appreciates. Even when Donald Trump is going to be elected, it appreciates. When Trump was elected in 2016, there was the dollar appreciated considerably for a few reasons. This is because in anticipation of the election, there's a risk. So in global risk, whichever way it goes, red or blue, it doesn't matter. There's a risk. So in risk off scenarios, the risk off layer component is dollar positive. It tends to appreciate. Conversely, when the risk is out of it, when inflation is when the election is clear and we have the result, then the risk is out of the way. So now then we know who the president is going to be. So then money comes back to the US, dollar positive again. And specifically and paradoxically, Mark, this is very interesting, but Trump, for a few reasons, is dollar positive. um, love him or hate him, but without I won't go into politics here, but
No, we won't do politics here.
he tends to be he tends to be dollar positive, and the fact and one of the reasons why the dollar has been relatively strong, besides the Fed dynamic over the last 2 months, is the possibility increasingly so that he will not only be the Republican nominee, but he will actually win. I think that Trump will win this election. So that's dollar positive. That's
Why is that dollar positive?
He's hawkish in foreign trade.
Yes.
So he will implement sanctions and brings the cards close to the chest. So production try to re-incentivize in the industry and closer to home. There's a lot of mental bravado, not only in his speech but in his actions. So is the MAGA, the Make America Great Again mentality is we need a strong currency to countering. There is the mindset that one countries usually think we need a weak currency to export more. Trump's mentality is we need a stronger currency to buy more things, to buy more weapons, to dominate more, to be more active. That's his mindset. Although he has the lower currency mentality as well, to lower rates to incentivize production and be um, have a rosier economic scenario. And also another reason why Trump is dollar positive is there's risk. Imagine if he was the president when Russia invaded Ukraine in 2022. Who knows what could have he could have applauded. He could have sent massive troops directly. So there's the unknown factor tends to is always risk off dollar positive. That's probably the main reason I think that it
All
tends to
right.
be. Uh,
So would you be dollar positive for 2024? Therefore,
Not
not only
really.
for that reason, but maybe that suits your mindset as well at
Yeah,
the moment.
not really. I think it will be two forces neutralizing each other in one, the U.S. election for all these arguments, the things that we just talked about, and then the Fed lowering rates. It's a beginning of a long lowering rate cycle, probably back to between 0 and 1. We will see in the next 2 years, probably around then, Fed rates back at 0. And
Okay.
eventually, if there's another pandemic or a crisis, they will back to QE, to expansion of QE. QE is still there, of course, but further expansion. So longer term is dollar down, but this is the beginning of the lowering cycle. There is, of course, intermediary retracements and push and pull of the pace. Oh, it's going to be 6 rate cuts this year. Oh no, not so fast. It's going to be 4, 3, 5. But nonetheless, it's down. Whereas other currencies, except Japan is a separate thing, but all other central banks will do the same, but not so fast. And so the faster pace of the Fed is dollar negative, but election is dollar positive. Not just election, there are other dollar positive things out there, which is the risk of a contagion in the Middle East war. If that expands, if Iran is dragged into the Middle East conflict more and more, not just via proxies, but if that expands, that's dollar positive just for risk off reasons, safe haven dynamic. So, and the U.S. economy is still very resilient. It's impressive. We'll see GDP today, but it's the soft landing case seems to be there. So that's dollar positive.
Okay.
Uh, so it will be throughout this year this tug of war of dollar positive, dollar negative scenarios. It's for sure not a clear case of being longer term, long or short dollar. So
All
it's a
right.
very tactical environment to be in and out trading. That's what we do in the fund. That's a very
That's a
tactical
good point.
approach. Yeah, shorter term movements.
That's a good point. We're going to have to leave it there because we've run out of time. But thank you very much, Rodrigo. I look forward to speaking to you next week.
My pleasure, Mark.
Bye
See you.
bye.
Bye.